Hey traders, welcome to Charts and Coffee. Hope everyone had a great long weekend and is recharged and ready to rock this third week of January. It's hard to believe we're embarking on our third week of the new year, and yet here we are. We have continued to see a lot of dovish expectations from the Federal Reserve. We continue to see the target rate probabilities, maybe not as overwhelmingly dovish as they were, but certainly the probabilistic outlook is that we're going to get a cut in March, May, and in June. And the other thing that I did, and I'm going to do a video on this, I don't know when, but I was kind of going down memory lane. And one of the questions that I've been getting is, okay, Rag, you established, and I hope I have using data, you established that rate hikes are not the death knell for the equity markets. That's not me saying so, right? If you observe what happened in 2023, yes, bond yields can go up. So can the dollar, and so can equities, right? So sticking with a correlation type mindset is very much something that traders start off doing, as if there's something that leads, as if there's something that lags, as if the markets are on a set path because other currencies, treasuries, are behaving in a certain way. And we've seen an entire year where that wasn't the case. So then, the fair question is on the flip side, Rag, if we do get rate cuts, and they are coming. So if we do get rate cuts, what are the chances that maybe we don't see a rally in equity? So I went back and took over the last 25 years in this current issue of Top Tier Outlook, which should be posted here already, if not very soon this morning. And I went back and described each one of the rate cutting cycles of the past 25 years. And then I posted an SPY chart. And we're going to dig into that some more because there is this very natural and I think healthy questioning of, hey, Rob, just because the Federal Reserve is going to cut rates, does it necessarily mean that Treasury yields are going to drop? Does it mean that the US dollar is going to drop or the euro rally? That'd be another way of looking at it. And does it necessarily mean that equities or the equity indices are going to rally either? So looking back 25 years, projecting forward the behavior of the Federal Reserve, and the answer is yes, but it's easy for me to say yes. We'll take a look at that narrative throughout the week and probably throughout the remainder of January, as well as what's happening with earnings, right? And I do want to remind everybody, seldom do earnings themselves, earnings season, seldom does that establish a trend. Central bank decisions, monetary policy is frankly the only macro that matters. In fact, the stepping stones to Jerome Powell and company's decisions are inflation metrics and are employment metrics. So the reason we watch those numbers is because we expect the Federal Reserve to be watching them too and make decisions based on that information, right? But at the end of the day, it's what Jerome Powell and company do or do not do that dictates what the macro of the environment is. And that's it, right? Anything else is just sounding fancy for the sake of sounding fancy. All right, so that's where we are. And really excited to be looking at some pretty interesting sector rotation, still quite healthy support in the broader averages. And of course, as always, if you have any questions, feel free to type them in and we'll go ahead and get started. So I think everyone kind of enjoyed that 3-day weekend because I don't see any questions yet. No worries. No worries. Feel free to type in it. Maybe you're looking at a symbol. Let me know what the symbol is. Let me know what the time frame is. Let me know if you've got a position in it or want to position in it. Let me know if you're bullish or bearish, right? In this room, in this Charts and Coffee session, the more information you give me about what you're looking at, clearly the more I can help you with what I'm seeing on the chart and going from there. And remember, gang, it's what we see, not what we think, right? I've been saying this forever. What do my indicators tell me about momentum, about trend, about the sentiment of the market, right? Those are three really big reads. And throughout Charts and Coffee and the free videos at Simpler Trading, I've shown you all a number of ways, even with free indicators, to do this. And as long as we start with the foundation of our trades being, are we bullish? Are we bearish? Where's the support and resistance? We're going to have a higher probability chance of seeing follow through once we get in. And that's really where we get paid. All right. So first up, I see Munair is asking about AMD. Yeah, so if we go up the food chain on AMD, Munair, that's going to be semiconductors. Semiconductors have been well supported, if not necessarily in an uptrend anymore. But AMD looks as good, if not better, than semis. But remember, if we're looking at an individual stock, what we have is a single fish in a school of fish, and they tend to move together, right? If SMH is going up, AMD is going up, we're going to look for those volatility support zones based on the DPMR. So this brings up a good second part of start with momentum and trend. The second part is, can you automate the zones that you want to actually engage the market at? So getting a market read is great, right? What's my momentum? Color coded at the bottom of the screen. We even have little labels for that. I know a lot of you like the little labels that I use for that too. But the history of the trend and momentum is far better than just a label, by the way, but whichever visually resonates with you. Once we have momentum and trend clear, now we start to ask for ourselves is which is the entry, which is the target. This case on AMD, gray support zones, right? What is support, by the way, gang? Support are buyers. What do buyers create? Buyers create demand. So whether it's a support zone, a floor, buyers, buying, or demand, a lot of folks like to get cutesy with all these words. They're all the same thing. Yes, they're all the same thing. So let's not get confused with, oh, I'm looking at a whatever level. It's all what kind of action are people likely to take. And in an uptrend or a bullish environment, when the market pulls back to support, floor, buying, demand, usually the action is they're going to get long the market in some way. All right. And that's exactly what I want to do here. All right. The bot is asking about daily Microsoft. All right. Bot, you're not supposed to get requests in on Charts and Coffee, but let's go and take a look at Microsoft. All right. Microsoft, great example of, again, what are the three things? Sentiment, bullish, or bearish hemisphere. Let's get hemispheric first. Let's get an idea for a north or south of the equator, right? Okay, bullish hemisphere. Second part, generally speaking, while this is neutral, the trend that preceded the neutral was up. All right, so now I'm bullish on the sentiment. I'm bullish on the general direction. And then now I need a zone. And that's going to continue to be the daily price movement ranges. One of the things that we want to caution ourselves from doing is using moving averages and chop. So even though I've got my 34 EMA wave on Microsoft, I really don't need it here. In fact, I'm not going to even pay attention to it here. So I think one of the things that we have to remember is moving averages are great. But if we use too many moving averages, if we use moving averages too often or inappropriately. What's inappropriately? I don't need a moving average in a non-trending environment. Its probability for showing me where dynamic support and resistance are far lower. But volatility is perfectly calculated to deal with chop and trends because it's more about the nature of price movement. What is a typical amount of price movement a stock like Microsoft moves? So if we can get down to about 380, that'd be a great spot on Microsoft. All right. Jane is asking, what level would I get into Adobe on the daily? Okay, so let's take a look. So long term, so Jane, there's two things I would mention here. A long-term hold for me is typically going to be more of a weekly time frame. But again, long-term is very subjective. What it means to me might be different from the hundreds and hundreds of us here in the room. So for me, long-term is typically 6 months minimum holding time and a weekly time frame in order to be able to negotiate that large a time horizon. Now, if I'm taking a look at the daily time frame, Adobe is not in a trend. In fact, Adobe is showing signs of potential movement lower. So I'm not a big fan of Adobe on the daily time frame because if I play a game of trade this, not that, and I ask myself, what is, and in fact, I'm going to slide an image over here. There we go. So remember I mentioned you can have cool little labels to help you out to understand momentum and trend. We've had these forever. Now I'm going to go to XLK. All right. This is the multi chart, by the way. This is a staple of what we use in the Sector Secrets Mastery for relative outperformance watch list building, right? So if I take a look here at everything in XLK. Now, what's XLK? It's a tech sector. It's the number one weighted sector in NASDAQ. It's the number one weighted sector in the S&P. And so what do I want to do here? Let me show you. So you might say, Rob, yeah, what do you do with this? When you're sitting and with the Sector Secrets Mastery members and you're looking at something like this, what do you do with an image like this or with an outlook or a view? No, definitely no, right? If I'm looking to be bullish, and I know my clock is over XLK, this is XLK itself, and you can see it's green trend, green momentum, green trend, green momentum, green trend, green momentum, bullish, 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 right? And if I can get number one, my sentiment read, number two, my momentum read, and number three, my trend, so sentiment, momentum, and trend, now I know what the best candidates for long positions are, and I can eliminate the ones from contention. So I would say right now, negative to Cisco, by the way. No Cisco, no Apple, no Adobe, no Oracle. There are better names. Trade this, not that. Yeah? So thanks for the question. All right. Next up is 6E. All right. Let me move this back over to my other screen. All right. So 6E. I love the question. 6E is the absolute best way to look at the US dollar, gang. There's no better way to look at the US dollar than through the lens of the euro, because the way in which the euro and the US dollar relate to one another is pretty much set by the fact that the euro US is the largest symbol of any kind in any market. And their correlation is inverse or negative at nearly 100%. If the euro zigs, the dollar zags. And I would say from a sentiment perspective, bullish hemisphere. All right. From a momentum perspective, a little bearish. From a trend perspective, neutral. There probably are better currencies to focus on right now than the euro. But I will tell you this as well. And you probably already know this, my friend. Christine Lagarde, the head of the European Central Bank, has two engagements on the calendar this week, and they are slowly starting to go dovish. So I would definitely wait for, and you're looking at the March contract of the euro, I would definitely wait for the catalyst. And I would rather be a buyer, by the way, of the euro, being in the bullish hemisphere. And I would rather focus on daily price movement range, gray zone. But be cautious here, because we are getting shifts across central banks, and it's going to be a really important patience testing setup. So I'm not super thrilled with currencies right now. I'd rather get a better trajectory on what central banks are doing. We'll go from there. Should I wait for GE to go through its earnings before entering a long position? Yeah. So Fernando, it depends on where you are in the 642 window. I like the long position. I concur. The question then becomes, where are we in terms of that window, that 642 window to earnings? We're 6 days out. So I would say yes, right? We're inside of a week. I would say yes. We're better off trying to use the volatility. Unless you're already in, we're better off using the volatility to enter after earnings. All right. Is it too risky doing a BA put? I'm going to leave BA alone. Yeah, I know a lot of folks are asking about Boeing. I wrote up a little blurb in Top Tier Outlook week before about the fact that it's going to drag XLI down. It's going to drag Dow. It's going to be a bearish factor. But I would leave Boeing alone. There's still a lot that we don't know. And we're still looking at the 200, which is where, if I was at all going to think about trying to put a little skin in the game, we're still not there yet. But no, I'm not really keen on puts this close to support. All right. BLP asked, do I ever use ATR? BLP, yeah, thank you for the question. Never. Don't like it. It's not the way in which I look at volatility. ATR says, let's look at the last 7 candles. If it's a 5-minute time frame, everyone does know, right? A very popular setting of a 7 ATR or 14 ATR. Let's say you're looking at a 5-minute time frame. It's looking at roughly the last 35 minutes of volatility, and it's going to project forward from there. There's no historical volatility component to an average true range. Now, before everyone's up in arms, I'm just talking fact about the way an ATR is calculated. If I'm looking at a 7 setting on a daily, that's the last 7 sessions. Daily price movement ranges are what's been happening in a symbol, not just over the past 6 months, but specific to the hour, day, or time of day. Day of week or hour of the day, completely different. I do not use ATR in the least. No, I do not. For me, the calculation is not what I'm looking for. I'm not here to say it's good or bad. It's just a completely different calculation than what I'm looking for when I'm trying to understand volatility. All right. Next up is, 6 months or longer, Jane. If you're looking at 6 months or longer on Adobe, then, definitely a weekly time frame. That's not for me. If I'm looking at a time horizon of that long, then it's the structure of the weekly, which is gorgeous and up. So, Jane, you need a 550 print. You need this thing to print 550 before even looking at a long position. But gorgeous trend, right? Gorgeous trend. And then if you'd like, another thing you can do if you want to be a little bit more aggressive is ask yourself, all right, well, if I'm gonna turn on a 21 exponential. All right, I'm gonna turn on a 21 exponential here. And what I'm gonna do is ask myself, are equities in a slightly more accelerated uptrend like we have on the weekly, are we at least hitting the 21? And you'll see it's absolutely in play. So if you have the 21 propulsion, think about turning that on and then going from there with your entry long. So those are things you can do. Oop, I did not mean to do that. Those are things you can do to enter an accelerated uptrend. Doesn't matter if it's a weekly uptrend, doesn't matter if it's a daily. If things start to accelerate away from the wave, if things start to accelerate away from even the daily price movement ranges, and we have a nice, good quality trend, then we definitely want to think about, can we take advantage of a, say, 21 exponential, but only in accelerated markets. All right. How to play the Japanese yen. It's like playing anything else. It's like trading anything else, gang. Let me get my charts back. Where's my Raghee trend? There we go. It's like playing anything else. How do we want to engage it? Is it going to be the futures contract? So 6J, you want to go mini or micro? Do you want to play the foreign exchange? Here's the thing with the yen. The yen is going to be weak anytime the equity markets are typically strong because it's a very popular carry currency. So you're going to see things like dollar yen on Forex, Aussie yen on Forex typically head higher because the yen is weak. Let's just go back to sentiment, momentum, trend, right? Where is the 6J? Below the 200. Bearish hemisphere, bearish sentiment. What is the current structure of the environment? Neutral, non-trending. What's the momentum? Bearish. So I would be careful with long yen positions. I'd focus on short yen positions. And remember, in currency trading, it's always one currency versus another. What is the strongest currency out there? We could argue the yen would be a good counter currency to the Aussie, maybe the Canadian dollar. Find a strong currency or even stable flat currency and short yen against it. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. And in the meanwhile, be good to each other, gang. I'll talk with you soon.